Hi, James Good here with a quick on the money video update for Monday, August the 20th, 2012. Now, over the weekend I was flipping through some charts I rarely use, and something caught my eye which I want to share with you. One of the indicators I've not really been able to get to grips with, to my shame, is called Andrews Pitchfork, a geometric tool invented by a former engineer, I believe. Very few people seem to be able to explain it or even understand why it works, but when it does work, boy, it can be amazingly helpful in showing when a move is about to reverse. You can use it on any time frame. Here, for example, is the Dow on a daily scale during the last bear market. And here's the pitchfork. And essentially it involves finding the median line of a trend. Once you've found that, the tool will automatically place two trend lines equidistant from that median line to which prices should be drawn and from which they should reverse and head back towards the mean during the course of the trend. Now, there's some trial and error involved in actually establishing the right line to use, which makes it a bit too subjective for my liking. But in a bear market, you would start at the peak of the bull market, or possibly at the prior peak to the final top, and then look for two pivot points, major pivot points, to help you establish the actual major path of the downward trend. And what you're looking for is clear evidence that on the way down, prices are using that median line as resistance and as support. And here it took quite a while to find it, but once prices bounced off this median line in July of 2008, you could be pretty sure that when they came back to the upper boundary line here, the market would probably be in trouble. And then once prices punched through the median and hit the bottom boundary line here, that they would find support and bounce back towards the mean, and they continued to do so all the way down to the very end of the bear market. So this is the potential power of an Andrews pitchfork. Now here's the pitchfork which has been working in this bull market. It turns out, not having looked at this for a while, that it's not just been working, it's been smoking. You could have determined that this was the right median line from the way prices reacted here to it as resistance, and here used it as support, and then watched as prices moved towards the upper boundary line, and look how they behaved, almost as if this was an actual physical barrier. They scraped along the top, finally succumbing to a correction in January 2010, moved up to the famous top in April, poking their head over the top and then collapsing back towards the median line, using it as consistent support throughout this whole correction. And see how they did so, bouncing off here, again here, punching through it here, all the way back, had to punch through it, used it as support, used it as support, punching back through, used it as support. So you knew you were onto something just by waiting until prices moved back to the top of the boundary. Here was January 2011, and then finally, of course, in May, when they poked their head again above the upper boundary and collapsed down to, wait for it, the bottom boundary line. And that was the October the 4th low. And ever since then, prices have been using this median line as almost uncanny resistance all the way up and as support, until very interestingly, this is the latest set of developments. Prices have not been able to force their way up towards the upper boundary again. They moved above the median line but then fell back, and here they are approaching the median line once again in August of 2012. In the short term, what we have is a setup where prices are approaching 13,350, which is the median line, and once they do, it's going to be very difficult to see how we sail on through up without some trouble. But in the longer term, the pattern is fairly concerning here, because you have a series of upper boundary touches, the failure to reach the upper boundary, and then the drop below and move up to the median line. We may be running out of gas here.